You know what, John? Come here. We are going to talk because one person, poor Luke Patterson from Genie, who lives in LA, his house burned down last night.
Oh my God.
Yes, so he's not coming. So we're going to chat now for 10 minutes.
Okay.
We're going to say outrageous things, so everyone comes in and you can give your presentation in front of a full audience.
I like saying
You have to
outrageous
be
things.
nimble in life. You know, we have to adjust. But we underestimate, unfortunately, the appetite for Halloween and I think outgoing in London. Maybe we should have started a little bit later. But now we have 10 minutes to chat. We know each other for quite some time. You have really shaped the digital system in Israel with OurCrowd. You opened it up to the world and you made it an amazing platform. Tell us a little bit about the history of OurCrowd, what the platform is, why you set it up, and where you're taking it.
So I'm about 40 years in the startup business. It's actually pretty shocking when I think about it. Most of those years were as an entrepreneur, big chunk as a venture capitalist. And after my last exit in 2012, which was a company called Vringo, which I
Ringo, I remember that very well.
took public on the New York Stock Exchange, I was trying to figure out what to do. And everyone said, okay, he's going to go back and build another venture capital fund or another startup. But I really wanted to mash up both of them. And I felt that there was a real problem and that venture capital has been the agent of disruption of every industry, except the one industry that's never been disrupted is venture capital. No, well, that too, although it seems as though some politicians today are doing their best to disrupt that. But clearly, venture has never been disrupted. And you talk to venture capitalists and you say, you know, why is it that your structure, the size of the funds, with a few exceptions like SoftBank and whatnot, and the kind of investors has simply never changed? And they'll say, well, because these are the laws of nature. And I said, sorry, no. And so, in particular, we had this issue where people were coming in droves to Israel to see the startup nation. They would get excited about what they saw, and they say, okay, I want to invest. But how does someone like yourselves in the audience or those who are listening actually write a $50,000 or $100,000 or $250,000 or even multi-million-dollar check intelligently?
Because if you want to be an investor in Index or Excel, it's very difficult to get in.
Not difficult. Forget about
Impossible.
it. Impossible.
And then if you do want to get in, you need to make a minimum investment of $10 million.
$5 million, $10 million. And you shouldn't, if you're going to play venture capital correctly, like people like the Yale Endowment, who have 22% of their endowment committed to venture, then you've got to make multiple commitments. You can't just back one manager, right? So you have to come with 10, 20, 30 million. Some people have that, many institutions have that, but the rest of us, chop liver. And I said, okay, that's an opportunity. Let's go find a way that this huge group of people, and we're talking about 100 million accredited investors worldwide. In America alone, there are 20 million households that meet the legal criteria of accredited investors. How do we bring them into this asset class in a smart way?
And by the way, money is a responsibility, right? If you make money, you have to give it back.
Absolutely.
And you can invest in the stock market and get a 1 or 2% return. But what if you give it to an entrepreneur who has this one special product which changes the world?
That's a great thing. So
that's why I think investing into startups is so important. And the VCs, obviously quite by nature, focusing on the most profitable business. But if you bring in the 100 million people you're talking about, we have the power to change the world.
We do. We have 40,000 now who are registered on our platform. We're managing about 1.3 billion in assets. They come from 183 countries. So I'm actually looking for an investor from Tonga. If anybody knows any Tongese investors, I would like to go out and visit them. But no, that's a joke. It's too early. You guys are all hungover. We all are.
Tango? You want to dance tango with me now?
Tonga.
Tango.
But anyway,
And you work mostly with Israeli firms?
Well, we started in Israel.
Yeah.
Now about a third of our investments are outside of Israel.
And one of them, I remember, was like a very famous one.
It's a
which
company
went
called
public.
Beyond Meat.
Who knows Beyond Meat?
So yeah, we're.
Who has eaten meat of Beyond Meat?
Yeah.
Look at that.
Well, they're changing the world. I mean, it's not just. It's such a big thing because the planet really is suffering from our addiction to meat. Okay, I mean, many of us are suffering from addiction to meat, in terms of health issues, but the planet itself, and this company just has been incredible.
They cracked it, huh?
Well, there are numbers. We just came off of lockup, and the numbers were announced. And the company is extraordinary. What a wonderful company. So we've been very lucky. We've invested in another American company called Jump Bicycles, which really cracked the code for bike rental. Was bought by Uber, and so we're part of.
They were in Berlin 2 years ago.
Yeah, so so all of a sudden you've got a platform like OurCrowd, where our individual investors were able to make a $10,000 investment in Beyond Meat side by side with Bill Gates and Kleiner Perkins, the same terms, same paper, same everything. In other words, they didn't get sloppy seconds in any way, shape, or form. They got the same venture quality deal because that's what we are, and you can get it for $10,000, and that's cool.
And the interesting thing is when you started earlier with your talk and you were talking about the VCs not believing in your model, and there was a time, I think like 3, 4, 5 years ago, where they were quite against OurCrowd, but now the sentiment has changed and you're doing a lot of joint investment with VCs.
Absolutely. I would say the vast majority of our deals are done side by side with VCs. VCs follow us. In fact, so much so that we've just launched a fund. We have 19 funds on our platform in addition to the 200.
Name some of the high-profile ones, because I'm amazed by some of the brands.
U.S. Venture Partners, we just became one of their largest LPs, have a strategic relationship. Here in London, we're a major LP with Ox, Richard Anton from Amadeus. In Israel, we're the largest investor in Medved, which is the leading mobility fund in the world. In the U.S., we're investors in Proof, which is a spectacular fund going after pro rata opportunities. Turns out that in
what are pro rata opportunities?
Okay, so in 75% of the unicorns, one or more of the Series A or seed investors are capital pools with less than $50 million, which is interesting, right? It means that all the big guys, most of the big guys, have one tiny little investor or more. Now, these tiny little investors can be very smart, as evidenced by them picking these big guys, but they can't follow their bets because they don't have enough capital to take advantage of what are called preemptive or pro rata rights, which are the follow-on rights. So this fund, Proof, makes deals with them and gets us as LPs, and then they bring actually co-investment rights. So we've invested in Daily Pay and Casper. They were the source of Beyond Meat for us. So we have this sort of symbiotic relationship.
I think you are one of the best connected people in the world for digital, no?
Well, I don't know if I'm one of the best, but I'm pretty connected.
So you're helping retail investors. You identify 100 million who qualify for.
If you can define retail as being a multimillionaire, yes.
Yes. No, you say 100,000 investment.
Sure.
You give
100 million.
You give access.
Yes, we give access to.
Do you also give opportunity to exit on the platform?
Not yet, but we
would make sense, no? But it's very difficult to change shares. Like in Germany, you have to go to the notary.
The secondary market is really tough, and most of these private companies don't want to print a price in a secondary transaction. You might be getting divorced, God forbid, want to dump your shares. You're not really sensitive to the price because you bought it so early. The company is very sensitive, and they don't want that out on a public basis.
Is that the biggest issue, or is it more the regulation?
There's regulation, there's that. There's the fact that it's still very illiquid, right? Beyond Meat, you can trade when it's still a private company. One of our little companies, much less so, because there's not a market for it yet, other than...
Yeah, there's Manhattan Research, the guys from America, they're doing this also, for some of the larger private...
The cool thing is that innovation finance is growing. People are experimenting. Whatever you think about SoftBank, they deserve credit for having tried to change the model, okay? In other words, to go raise more money than ever has been raised before. I think that venture capital needs innovation as itself, not just as an agent of change where they're helping entrepreneurs disrupt companies, but the act of investment in startups needs to have all kinds of new technologies and new models, and we're happy to be part of it.